Welcome to our deep dive into Diamondback Energy Inc. ticker FANG. Could this oil and gas giant stock soar to $1,000? Today we'll analyze its strengths, weaknesses, financials, and long-term potential, plus compare it to major market indices. Let's get started. Diamondback Energy is a leading independent oil and gas company headquartered in Midland, Texas. It operates primarily in the Permian Basin, with 1.8 billion barrels of oil equivalent in reserves. Ranked 479th on the Fortune 500, it's a key player in U.S. shale. But can it hit $1,000 per share? Let's break it down. Diamondback's strengths are clear. A massive reserve base, a stellar 68% EBITDA margin, and a juicy 5% dividend yield make it attractive. Its recent merger with Endeavor boosts scale and efficiency. However, it's not all rosy. The stock is tied to volatile oil prices, and its operations are concentrated in one region, the Permian Basin, making it vulnerable to local risks. Plus, rising environmental regulations could increase costs. Compared to competitors like Pioneer Natural Resources, Diamondback's margins are solid but slightly lower due to its smaller scale. Diamondback's profit margins are strong, with a 68% EBITDA margin in 2024, driven by efficient Permian operations. However, margins swing with oil prices, up in 2022, stable in 2024. Its debt is manageable, with $7.5 billion in EBITDA supporting repayment, but low oil prices could strain cash flows. Side incomes like royalties are minimal, so it's heavily reliant on oil and gas sales. Since its 2012 IPO at $17.50, Diamondback stock has climbed to around $170-$200, delivering a 10x return, outpacing the S&P 500. Its 5% dividend yield is solid, but inconsistent increases mean it's not a dividend aristocrat. Expect 5–10% dividend growth in strong years, tied to oil prices. By 2030, Diamondback will likely focus on Permian efficiency and M&A. By 2040–2050, diversification into renewables or carbon capture could be key, but declining oil demand may cap growth. Political support for fossil fuels helps, but stricter climate policies or social shifts to sustainability could hurt. A $1,000 stock price by 2050 is possible if oil demand stays strong, but it's a long shot. Short-term, expect 5–15% annual returns if oil prices hold at $70–$90. Long-term, 8–12% is feasible, but volatility is high. Diamondback outperforms the S&P 500 in oil booms but lags in bear markets. Compared to global indices like MSCI World or FTSE 100, it's riskier but offers higher upside in bullish scenarios. Can Diamondback hit $1,000? It's unlikely by 2030, but possible by 2050 with strong oil demand and smart investments. Weigh the risks and rewards, and always consult a financial advisor. Like and subscribe for more stock analyses.